Hey everyone, Couch Investor back to another video for today. So let's talk about PayPal. The stock, the business was flying high during the pandemic, but coming out of the pandemic, growth was slowing down, moved away from eBay as well. Now at the end of the year, CEO will step down. We also had the CFO change. So a lot of change in PayPal. Also, they didn't really meet their own goals, their own expectations. Now they switched from going after a lot of users, transacting users, to going after lucrative transacting users, because again, it makes no sense to go after users that just use the platform once a month, once a week. No, they rather spend their money to go after users that are maybe using it daily or a couple of days a week, which, to be honest, is much better for them, especially for the health of the company. Now, stock-wise, the stock this year is down. Last quarter, a double beat and a rosier guidance. We're going to talk about a couple of things they mentioned during the earnings call, which is extremely important for the growth of the company. Because currently it sits at a 3-year CAGR revenue growth of around 15%, which, if we're being honest, is not that much if you're looking at PayPal as a super growth company right now. You're looking for that X bagger for the next coming years. But the underlying business, the bottom line, still pretty good. Still a compounding machine when it comes to free cash flow, $5 billion, enough money to spend on share buybacks. Why is this important? Well, because if there is no, let's say, huge growth for the company, because right now we're in this economic cycle where things don't really move that much on the upside, then at least the company can reward shareholders by buying back shares. That's how your shares are worth more. And that's exactly what they've been doing. We're going to have a look at that in a bit. But the chart here says a lot. In the last couple of weeks and months, actually, the stock hasn't really moved much from around $70 to $75 or so. Right now, with the news of them partnering up with Visa and Visa Plus, which we're going to talk about later in this video, the stock is up close to $76 over the 20 and the 50-day moving average. Obviously, the 200-day moving average still far away. But with earnings coming up beginning of May, close to a month from now, I think we might see a positive reaction for PayPal. In the earnings call, they already told us that January, February, positive signs. So we might finally see PayPal, the stock, actually move on the upside. Now, that doesn't mean that the stock is extremely cheap right now. No, I think it's reasonably valued, which we're going to have a look right now. So this is the state of PayPal today. Forward PE of 15.2x, which, okay, if it can grow more than between 15 and 20% or so, I think that's an okay valuation to pay for. Year to date, the stock, I have to correct myself, year to date, the stock is up 4.63%, but over the year, it's down 33%. Now, free cash flow in the last 12 months, $5.1 billion, again, enough to buy back shares, which you can see here at the bottom. Shares outstanding have been going down, which again, this is one way to create value when the company itself can't really grow that much. Price to earnings to growth ratio in the next 12 months, 2.55. Usually you want to see it much closer to 1. This is where it was a bit in March 2022. Again, of course, it went up because of growth and a bit of the profitability of the business got hit. This can improve pretty fast in the next coming quarters. Then, gross profit margin in the last 12 months, 42%, has been coming down since the highs of the pandemic. Okay, that's normal. If you've been following the company, you know why this happened. Return on equity has also come down from the 20+%. Same reason there. So overall, you might say that right now might be a good time to buy PayPal because, well, inflation has come down. We're going to actually get some numbers for CPI this week. Inflation comes down. Maybe the economic cycles improves over time, and that will certainly be a tailwind for a company like PayPal. Now, before we jump into what they mentioned during the earnings call and why that's important, we're going to talk about Braintree and PPCP as well. If you like this type of videos, leave it a thumbs up, subscribe if you have not. We'd really appreciate that. We're trying to reach 30,000 subscribers by the end of the year. Let's try and reach 25 first. Not that far away. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Make sure to check out the merch store on Shopify. So where will the growth come from? So last quarter, they say here, in the first half of this year, we intend to fully ramp our unbranded offering to small and mid-sized businesses, either directly or through channel partners. The launch of PPCP or PayPal Complete Payments will meaningfully expand our unbranded total addressable market by as much as $750 billion and enable us to drive incremental share with higher margins than our Braintree enterprise service. And this is very important. Even though Braintree has grown quite a lot in the last year or so, it's not a high margin business. They say themselves. They say here there are a number of high margin businesses that we add onto Braintree, but Braintree itself is a low margin business. Now, last quarter, they mentioned that for the full year 2022, transaction and engagement saw a 13% increase year over year, driven primarily by Braintree transaction growth. Now, if we scroll down and we look at the mix here, so we can look at global TPV mix, 2021, $1.25 trillion, 2022, $1.36 trillion, unbranded processing, which again is comprised by Braintree, and that grew 40% year over year and also 40% on a 3-year CAGR. And so going back to the point I mentioned before, they say here Q1 is off to a very strong start. We're seeing widespread acceleration both in January and February. We're seeing it in branded checkout, which has stepped up quite nicely from Q4. We're seeing it in our Braintree services as well. So in my opinion, the guidance that they gave us for Q1 should be met, and maybe they can even beat it. Now, when it comes to higher margin businesses, which should offset Braintree, even though Braintree does drive growth, as they said, low margin business. So they say here we've put a lot of investment against PPCP, which is our unbranded small and mid-sized and channel partner play. And by the way, it's not just unbranded, it has our most advanced checkout flows in it. And we're going to probably take about 20% of our TPV through PPCP with integrations through Shopify, Adobe, TikTok, and move that to our most advanced checkout flows. And also more recently, they've added the option of Apple Pay. Now, Apple Pay over the years has taken some market share from PayPal, but to be honest, if they don't add Apple Pay, it will hurt PayPal even more, because a lot of teens, a lot of iPhone users overall, if they don't see the option of Apple Pay at checkout, they are very, very likely to just close it and move on to another website that does accept Apple Pay. Now, another growth driver here is obviously Venmo. We talked a lot about Cash App on this channel, but one of the main competitors of Cash App is obviously Venmo. Now, last year, if you look at Venmo, it only grew 7%. Now, we know that Venmo is partnering up with the likes of Amazon, and as you can see here, also with the likes of Starbucks. Now, again, with something like Venmo right now, it's really to get as many people on it as possible, try to make big partnerships such as Starbucks, Amazon, and many others as well, and then build on top of that. Try and give more options. Optionality is always a good thing, right? And with Venmo, this is exactly what is happening right now, because we also had the announcement of Visa and Venmo, or Visa Plus and Venmo. So news broke out that today Visa announced it is partnering with PayPal and Venmo to pilot Visa Plus, an innovative service that aims to help individuals move money quickly and securely between different person-to-person or P2P digital payment apps. Later this year, Venmo and PayPal users in the United States will be able to start moving money seamlessly between the two platforms. Visa Plus will not require users to have a Visa card. Instead, by setting up a personalized payment address linked to their Venmo or PayPal account, individuals using either app will be able to receive and send payment quickly and securely between the platforms. So, overall, as you can see, there are some growth drivers for PayPal right now, especially when the economy will reaccelerate, when inflation comes down significantly so that spending increases. I think PayPal could be a good pick right now. Of course, things can go wrong if the company does not execute well, but right now I do see a U-turn, a comeback type of story happening here. I currently don't own any shares in PayPal. I'm just looking from the silence. Of course, do share your thoughts down in the comments below. Do you like it at this price? What do you think about PayPal right now? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.